You have probably seen this equation before. Assets is equal to liabilities plus owner's equity. It looks simple, but here is the interesting part. Why does it always balance? What happens when the owner puts money into the business? What happens when the business borrows money? What happens when it buys something? What happens when it earns money? Does the equation ever break? No. And today we are going to see exactly why. Welcome back to Canvas Academy. Today we are going to see why does the accounting equation always balance. Before we start, let's bring back the three things we have already learned. Assets are what the business owns or controls that have value. Liabilities are what the business owes to outsiders. And owner's equity is the owner's claim on the business. Put those three together and we get the accounting equation. Assets is equal to liabilities plus owner's equity. Rather than memorizing this equation, let's watch it work. Imagine we are starting a small coffee shop. We'll call it Canvas Cafe. You, the owner, put 5 lakh of your money into Canvas Cafe. The business now has 5 lakh rupees in cash. Cash is an asset. So, assets is equal to 5 lakh rupees. Where did that money come from? From the owner. So, owner's equity is equal to 5 lakh. Our equation is 5 lakh is equal to 0 plus 5 lakh. Balanced. But 5 lakh isn't enough to get our cafe ready. So the business borrows another 2 lakh from the bank. What happens now? The business receives 2 lakh cash. So the assets increase from 5 lakh to 7 lakh. But the business now owes 2 lakh to the bank. That's a liability. So our equation becomes 7 lakh is equal to 2 lakh plus 5 lakh. Still balanced. Did you notice something? When the bank gave us 2 lakh, both sides changed. Assets increased by 2 lakh and liabilities increased by 2 lakh. That's the basic idea we will keep seeing throughout accounting. A transaction doesn't just magically change one side. Something happens and there is another side to that change. Now, Canvas Cafe needs a coffee machine. Let's say it cost 1 lakh rupees. We pay for it in cash. What happens? The business now owns a coffee machine. That's an asset. But we also used 1 lakh rupees of cash. Cash is an asset too. So, one asset increases while another asset decreases. The total assets are still 7 lakh. Liabilities are still 2 lakh. Owner's equity is still 5 lakh. The equation is still 7 lakh is equal to 2 lakh plus 5 lakh. Balanced. And this is something beginners often find surprising. Not every transaction changes the total amount of assets. Sometimes one asset simply changes into another asset. Cash becomes equipment. The business hasn't suddenly become richer or poorer just because it exchanged one asset for another. Now let's say the cafe needs some furniture. The furniture costs 1 lakh rupees. But this time we don't pay immediately. The supplier allows us to pay later. The business now has an additional 1 lakh of furniture, so the asset increases to 8 lakh rupees. But the business now owes the supplier 1 lakh rupees. That's another liability. Liabilities increase to 3 lakh rupees. Owner's equity is still 5 lakh. So 8 lakh is equal to 3 lakh plus 5 lakh. Still balanced. Are you starting to see the pattern? Something changes on one side and something changes somewhere else. The equation keeps adjusting itself, but it doesn't break. Now, our cafe finally opens and the customers start coming in. Suppose the cafe earns 50,000 rupees in revenue. The business receives cash. So, assets increase by 50,000 rupees. But this isn't alone. And it isn't money the owner personally puts in. The business earned it. That earning increases the owner's equity. So assets increase and the owner's equity increases. Probably you must have been thinking, why does earning revenue increase owner's equity? Because after the business earns revenue and pays its expenses, the profit belongs to the owner. So, in simple terms, profit increases owner's equity and a loss decreases it. Let's say the cafe pays 20,000 rupees for electricity, wages, and other expenses. Cash decreases. That's a decrease in assets, and expenses reduces profit. So they also reduce owner's equity. Again, the equation stays balanced. Let's stop the cafe story for a moment. Look at what we have just seen. The owner invested money, the bank lent money, the business bought equipment, it bought furniture on credit, it earned revenue, it paid expenses, and after every single transaction, the accounting equation remained balanced. And now we can answer our original question. Why does the accounting equation always balance? Because every transaction has an effect that keeps the relationship between the business assets and the sources of those assets in balance. The business resources are its assets, and those resources have been financed by either the owner or the outsiders. That's owner's equity and liabilities. Think of it like a balance scale. On one side, assets. On the other side, liabilities plus owner's equity. Every transaction may move the numbers around, but the scale stays balanced. So, the accounting equation is assets is equal to liabilities plus owner's equity. And we can rearrange it to owner's equity is equal to assets minus liabilities. And liabilities is equal to assets minus owner's equity. Same relationship, just viewed from different angles. Now let's test ourselves. A business has 10 lakh rupees in assets and 6 lakh rupees in liabilities. What is the owner's equity? Think about it. 10 lakh minus 6 lakh gives us 4 lakh rupees. So 10 lakh is equal to 6 lakh plus 4 lakh. Balanced. And if the equation ever feels confusing, come back to these three questions. What does the business have? Assets. What does the business owe to outsiders? Liabilities. What does the owner's claim? Owner's equity. That's the accounting equation. So now you don't just know the equation, you know why it works. Every transaction changes the business in some way, but the accounting equation keeps the relationship balanced. And once you understand that idea, accounting starts become much less mysterious. If this lesson helped you understand the accounting equation a little better, consider subscribing to Canvas Academy. We will keep building accounting from the ground up, one simple idea at a time. Until next time, keep learning, stay curious, and I'll see you in the next lesson.